Hello, and welcome to this presentation outlining Division B pension benefits available to Metro government employees. This presentation is intended for employees who are approximately 5 years from retirement. This information presented does not apply to those enrolled in the Division A pension plan. During this presentation, we will guide you through an overview of your pension benefits and provide you with details on getting you ready for retirement. There are several key components to your Metro pension plan. Your pension is based on highest 60 consecutive earnings and your years of service. You are automatically enrolled in the plan after 6 months of continuous credited full service. You may retire with a normal or early pension, or you may end your employment with Metro and defer or freeze your pension until your normal retirement age. We'll discuss what all of this means in a few minutes. Let's talk about what it means when an employee is vested. Vesting is when an employee earns a future pension benefit based upon their hire date and years of credited service. Metro has 2 different vested rules, and your hire date determines which rule you fall under. Employees hired after January 1st, 2013, or any non-vested employee rehired after that date must have 10 years of credited service to be vested and eligible for a future pension benefit. If you are employed with Metro on October 1st or hired on that date by December 31st, 2012, you are under the 5-year vesting requirement. Your eligibility for a pension is based on several factors, which include your age, years of service, and which pension plan you're in. The Police and Fire Pension Plan includes sworn police officers, persons in the ambulance division who are certified EMTs and paramedics, and fire employees in suppression, prevention, training, and inspection. Also included in the Police and Fire Plan are correctional officers and park rangers. All other employees are in the General Government Pension Plan. If you have questions about your plan participation, contact your department's Human Resources Coordinator. Regardless of which pension plan you're in, you may retire early with a permanent reduction to your pension, or you may wait to your normal retirement age. If you leave Metro before you are eligible to retire, your pension will be deferred to your normal retirement age. First, we're going to cover the general government employees' pension eligibility. Remember, general government includes everyone who is not in the Police and Fire Pension Plan. The normal retirement age for a general government employee is age 60, once your age plus your years of service equal 85 points. This is what we refer to as the Rule of 85. Let's go over a few examples of how you can meet the Rule of 85 and qualify for a normal pension benefit and have no reduction to your pension. If you are 60 years old and have 25 years of service, you have 85 points because 60 plus 25 equals 85. If you are 62 and have 23 years of service, you'll also have 85 points. If you are 64 with 21 years, you'll have 85 points. Anything less than age 60 and less than 85 points is an early pension benefit. The exception to this is if you are age 65 and you have 5 years of credited service, you are eligible for a normal service pension benefit, even if you are under the 10-year vesting requirement. The normal retirement age for a police and fire employee is age 53 with 75 points. You've probably noticed they are allowed to retire at a younger age than general government employees. The reason for this is their jobs are more dangerous, more physically demanding, and more emotionally stressful than other government jobs, and as a result, they typically have shorter careers. Police and fire employees can leave as early as 53 as long as they qualify under the Rule of 75. A few examples of how the Rule of 75 can be met are shown on this page. Any employee who is 60 years old, actively working, with 5 years of service is eligible to take a normal service pension. This includes those hired under 10-year vesting. If you are 53 years old and have 22 years of service, you have 75 points and can take a normal pension. If you are 55 and have 20 years of service, you'll also have 75 points. If you are 58 with 17 years, you have 75 points. Anything less than age 53 and less than 75 points is an early pension benefit. The exception to this is if you are age 60 and you have 5 years of credited service, you are eligible for a normal service pension benefit even if you are under the 10-year vesting requirement. If you don't want to wait for your normal retirement, you may qualify for an early retirement. If you decide to retire early, please understand you'll have a permanent reduction to your pension since Metro will be paying you a benefit over a longer period of time. While the general government and police and fire plans have different early retirement age minimums, they both have the same reduction factors for retiring early. If you retire early, your pension will be reduced 4% for each of the first 5 years, and then 8% for each additional year. This means if you retire 4 years early, your pension will be reduced 16%. If you retire 8 years early, your pension will be reduced 44%. This reduction will be permanent and will never change. General government employees may be eligible for an early service pension as early as age 50 if you also have 10 years of credited service. A pension is considered early if you are not yet 60 years old and have at least 85 points. If you are 53 with 11 years of service, you meet the requirements for an early service pension, but your pension will be reduced since you don't meet the normal retirement age or rule of 85. If you are 58 and have 27 years of service, you have 85 points, but you're retiring 2 years early, so you'll have an 8% permanent reduction. Police and fire employees qualify to take an early retirement if they are at least 45 years of age and have at least 10 years of service. A few examples of this are shown on this page. Remember that the rule of 75 only comes into effect if you are at least 53 years old. Police and fire employees may be eligible for an early service pension as early as age 45 with 10 years of credited service. If you are 45 with 20 years of service, you meet the requirements for an early service pension, but your pension will be reduced since you don't meet the normal retirement age or rule of 75. If you are 50 and have 25 years of service, you have 75 points, but you're retiring 3 years early, so you'll have a 12% permanent reduction. Now that your eligibility has been determined, how is your pension actually calculated? The service pension formula for general government employees is calculated at the flat rate of 1.75% times final average earnings times years of credited service. An example calculation can be seen at the bottom of this slide. For police and fire employees, the service pension formula is 2% for the first 25 years of credited service and 1.75% for service beyond 25 years. An example calculation can be seen at the bottom of this slide. If an employee has 28 years of service and his average earnings is $65,000, the first step in this calculation is to take 0.02 times 65,000 times 25 years of service. This first calculation gives you an annual pension amount. The second step of this formula is 0.0175 times 65,000 times 3 years, which is the total service over 25 years. Once you have both amounts from each step calculated, add them together and divide the total by 12 to get your monthly pension amount. So you may be wondering how your final average earnings is determined. Your final average earnings is your highest 60 consecutive months of earnings whenever they occur, whether it's in the middle of your Metro career or your last 60 months of service. And they do not have to be on a calendar year basis. The only requirement is that they be consecutive. This slide shows an example of an employee's earnings over a 14-year period. In this employee's case, their last 5 years of earnings were not their highest 60 consecutive months of earnings, but were instead years 9 through 13. And remember, these do not have to be based on a calendar year. Another key component of your pension eligibility and calculation is the total credited service you've earned while you've been employed with Metro. There are several dates that go into this calculation, such as your hire date, or the date you became eligible for benefits, your last day on the payroll, which may be the date you stopped working, or the last day you were paid for on the payroll. We also consider any unused sick leave you may have and any leaves of absences you have taken. Lastly, any prior service you may have with Metro is also reviewed. In summation, if you are not earning money from Metro, you are not earning credited service. Your credited service will be reviewed on a month-by-month basis, and credit will be given for each month based on how many hours you were paid during a month. Generally, if you are paid for 80 hours in a month, you'll receive full credit for that month. If you're paid for 79 to 40 hours in a particular month, you'll earn half credit for that month. If you are paid for less than 40 hours in any given month, you will not receive credited service for that month. Your sick days are a great benefit to have when you are ill and can't come to work. But did you know that if you don't use up your sick days, they'll count towards your pension? Your unused sick leave days, as well as days you have in your sick leave bank, can be used toward your pension in one of two ways. They can be added to your service time to increase your total credited service, which will increase your monthly amount, or they can be used toward your retirement age, getting you closer to your normal retirement age and thereby reducing your penalty for retiring early. Either way, it's a win-win for you. I'm sure you're wondering how your unused sick leave time days are calculated. Every 20 days of unused sick leave equals 1 month of credited service or gets you 1 month closer to your normal retirement age. If you have 120 days, you'll receive 6 months of credited service, or it'll get you 6 months closer to your normal retirement age, whichever is more advantageous to your particular circumstances. Sick leave days are rounded up at 10 days. In other words, if you have 31 days, you'll receive credit for 2 months because 20 days will give you 1 month and the extra 11 days will give you another month. But if you only have 29 days, you'll only receive 1 month's credit because the 9 days is less than 10 and therefore not rounded up to another month. Here is another example of how saving your sick leave can benefit you at retirement. If you're 59 and a half years old and have 25 years of credited service and 120 days of unused sick leave, you can use those extra 6 months of credit towards your age to retire 6 months earlier with a full pension rather than taking an early retirement. Vacation days are treated differently than sick leave. Most often, your vacation days will be paid out in a lump sum payment on your last active paycheck, and they will not be included in your pension earnings. Federal income taxes will be withheld from the vacation pay and may put you in a higher tax bracket. You may avoid these taxes by rolling your lump sum payment over into your 457 deferred compensation plan through Voya. For more information, contact Voya directly prior to this payment being made. If your department allows you to run out your vacation days rather than being paid in a lump sum, you'll receive credited service until your vacation days are exhausted. Each department has discretion over how these days are paid out. You will need to reach out to your department's Human Resources Coordinator to find out if you have the option to run your vacation time out or if it will be paid in a lump sum. If your vacation days are run out instead of being paid in a lump sum, you will continue to earn credited service until your days are exhausted. As soon as you stop physically working, you will no longer accrue vacation or sick leave. If you are running out vacation leave, you will be paid for any holidays that occur during that time, but you will no longer accrue any sick or vacation leave. The Deferred Retirement Option Plan, or DROP, is a pension option available to employees who have at least 25 years of service and are retiring with a normal pension benefit. DROP payments are issued as 1, 2, or 3 years of payment in a lump sum payment. If you choose one of the DROP options, your monthly pension amount will be permanently reduced. If you elect a DROP, you have a few options on how to handle the payment. If you choose to have the DROP paid directly to you, significant taxes will be withheld. To avoid the tax withholding on the DROP payment, you may roll the payment into your 457 deferred comp plan with Voya or into an IRA or other qualified plan. You may choose to roll over all or a portion of the lump sum payment. You should consult your financial advisor if you have any questions about taxes on this payment, and there will be forms that are required to be completed prior to the payment being made. When you retire, you'll be given a one-time choice to leave a survivor benefit to your spouse or someone else of your choosing. This selection is permanent and cannot be changed once the benefit board approves your pension. Your pension is based on your age and the age of the individual you're leaving the survivor benefit to. Your pension will be reduced by electing a survivor option and will be further reduced based upon that individual's age. Remember, this is a permanent reduction and a permanent election, even if you later get divorced. And the survivor option you choose at retirement cannot be changed once the benefit board approves your benefit payment option. As we just discussed, you'll have the opportunity to elect a benefit option when you retire. Let's go over your options. The normal form benefit provides the largest monthly benefit but leaves no survivor benefits at your death. Option A. Joint and Survivor 100% provides your named beneficiary with the same pension you were receiving at the time of your death and for their lifetime. If your beneficiary dies before you do, your pension will not change. Option B. Joint and Survivor 50% provides your beneficiary with a 50% of your pension at the time of your death for their lifetime. Just like Option A, if your beneficiary predeceases you, your pension will not be affected. With Option D, 120 payments certain, you'll receive a lifetime benefit, but if you die before 120 payments have been paid to you, your named beneficiary will receive the remaining payments, but once a total of 120 payments have been made, their benefits will stop. For example, if you pass away after 5 years, they will receive a pension for another 5 years. If you pass away after 20 years, there will be no survivor benefits payable. Option E, Joint and Survivor 100% with pop-up, provides your survivor the same amount paid to you as a retiree for their lifetime. If this survivor predeceases you, your pension amount will increase to the normal form benefit. Option F, Joint and Survivor 50% with pop-up will give your survivor 50% of the amount paid to you as a retiree for their lifetime. If this survivor predeceases you, your pension amount will increase to the normal form benefit. You should consider your personal circumstances and needs prior to choosing a benefit payment option. You may run your own pension estimates, assuming different retirement and survivor scenarios by logging into the Pension Self-Service portal, found on Metro HR's Service Pension Benefit page, or by following the quick link here. If you have any issues logging into the portal, you'll need to contact the ITS Help Desk. If you are eligible for Social Security, you will receive those benefits in addition to your Metro Service pension. Social Security pays you a regular monthly benefit when you retire, become disabled, or die. Your dependents may also be eligible for Social Security benefits when you retire, become disabled, or die. You can retire at any time between age 62 and 70 and receive retirement Social Security benefits. If you choose to begin receiving benefits earlier than your full retirement age, your Social Security benefits will be reduced. On the other hand, if you wait until after your full retirement age, your benefits will be higher. You must apply for Social Security 3 months prior to the age you want to begin receiving payments. Full retirement age for Social Security depends on when you were born. The chart on this page shows when you will first be eligible for full Social Security benefits. Let's talk about your insurance benefits and what happens when you retire. While your pension is being processed, your medical, dental, and vision insurance will remain in place. When you complete your retirement paperwork, you'll be given the opportunity to keep or enroll in medical, dental, and vision coverages, as well as add any eligible dependents. You may also opt out of Metro's coverage. If you choose to opt out and want to preserve your future right to opt back in, you must provide proof of other non-Medicare coverage. If you have an eligible change in status, you must contact Metro HR within 60 days to make a corresponding change to your coverage, or you may never add that dependent or enroll in coverage again, even during annual enrollment period. As a retiree, Medicare plays an integral part in your Metro insurance benefits. Metro requires all pensioners and dependents to elect Medicare Parts A and B as soon as it's first offered to you, regardless of your other coverage or employment status outside of Metro. Once you have both parts, your Metro insurance will become secondary and Medicare will be primary. If you are eligible for Part B but do not accept Part B, your medical claims will be processed as if you did have Part B, which means you could be financially responsible for 80% of all of your medical claims. Metro's insurance is designed to work with Medicare Parts A and B, and therefore Metro retirees have better coverage than many other retirees. You'll be eligible for Medicare Parts A and B no later than age 65, but you may be offered coverage earlier if you have certain medical conditions. Once you receive your Medicare card in the mail, please be sure to provide a copy to Metro Human Resources. Your insurance premiums may be reduced. You should not enroll in Medicare Part D. Your Metro insurance provides better pharmacy coverage, and Part D will interfere with your Metro insurance plan. If you participate in the flexible spending accounts, your participation will continue as long as you are on active payroll. Once you are no longer on active payroll, your participation will stop and you'll have 90 days from the date you come off active payroll to submit your receipts to the FSA vendor. As a retiree, Metro provides you with $10,000 of basic term life insurance at no cost to you. This amount is payable to whomever you decide to name as your beneficiary. Your beneficiary can be updated at any time. You may also convert part of the basic life insurance you lose when you retire to an individual policy. You may convert in $1,000 increments up to $40,000, but you must make written application and payment of premium to the life insurance provider within 31 days. To obtain a conversion form, contact Metro's life insurance provider. If you are enrolled in supplemental insurance as an active employee, you are able to keep $10,000 or $20,000 as a pensioner, but no more than the amount you had as an active employee. If you do not have supplemental life insurance as an active employee, you cannot enroll at retirement. If you have any voluntary insurance plans deducted from your Metro paycheck, you may be able to continue these deductions when you retire. You will need to contact the voluntary insurance company to set this up and submit a new payroll deduction form to Metro Payroll. Failure to make these arrangements could result in a loss or lapse of coverage. Pension checks are issued every month on the last working day of the month. If you are enrolled in medical, dental, and vision coverages, current premiums and any premiums owed will be deducted from your first pension check. Metro offers direct deposit for pensioners. If you currently have direct deposit, you will have to resubmit as a pensioner. Service pensions are considered taxable income. Social Security taxes are not withheld from your pension check. Pensioners receive a 1099-R tax form each year instead of a W-2. You will need this information to file your income taxes. Retired public safety officers may be eligible for certain tax advantages. For more information, contact your tax advisor. Metro service pension plans have cost of living adjustments, COLAs, to help protect your income from the effects of inflation. They are based on the federal government's Consumer Price Index and must be recommended by the pension plan actuary and approved by the benefit board before they are given. COLAs under the Metro plan are effective the first of the year and are paid on the January pension check issued at the end of the month. To apply for your pension, you should contact Metro Human Resources at 615-862-6700, and you should apply at least 4 to 6 weeks before your estimated retirement date. We need this amount of time to gather all necessary paperwork and required documents prior to your last day on payroll and to calculate your pension benefit. Once you've applied, it will be about 4 to 6 weeks from your final active paycheck to the date you receive your first monthly pension check, so make sure you plan carefully. There are a few documents that are required before Metro Human Resources can calculate and finalize your pension. Please take a look at this list. If you are a Metro service pensioner, you may work outside of Metro and keep your Metro pension. If you choose to come back to Metro and work after your retirement, please know that you must work less than 20 hours per week or your Metro pension will be stopped and you'll be considered an active employee again. If you are in the 457 Deferred Compensation Plan, any plan payments will be stopped while you're working for Metro, even if you're only working part-time. Please know that other income may have an effect on your Social Security benefits, so please check the paperwork provided to you by Social Security Administration for those details. Part-time employment with Metro after retirement is completely up to each individual department. This is not something that is guaranteed. Make sure you work out these details with your department prior to your retirement. If you do go back to work part-time, we ask that you take 1 full pay period off of work before being rehired. This allows for a clean break for pension calculation purposes. There are many costs that are associated with working, and once you consider these costs, you may find it financially feasible to retire. Some of the costs of working include gasoline, wear and tear on your vehicle, work-related clothing and grooming expenses, daycare for your child or that of a parent or grandparent, your morning coffee stop, eating lunch out and snacks. You may also be ordering takeout because you're too tired to cook a healthy meal when you get home. You may also find yourself rushed for time and stopping at a store for convenience sake rather than planning trips to less expensive stores. And don't forget about the cost of your time traveling to and from work. These are just a few of the real costs of working and something you may want to factor into your retirement decisions. There are also many emotional, social, and physical things to consider when making your decision to retire. Are you still satisfied with your job? Do you still take pride in your career and work accomplishments? Is work your social time? Is your spouse retired too? Are you wanting to relocate or be closer to family? Do you have hobbies outside of work? There are so many considerations, and if the benefits of the retired life outweigh the benefits of working, maybe retirement is closer than you thought. Metro's Employee Assistant Program, EAP, is offered to all employees. A few of the free services offered include Preparing for Retirement, Retiree Assistance Program, Work-Life Balance Counseling, Legal and Financial Consultation, Elder Care Resources, and other counseling opportunities. You may find these services very helpful in planning your upcoming retirement. Retirement is an excellent time to look at some important life milestones if you hadn't already taken care of these things. Some of these including setting up your estate, establishing your will, setting up a living will or durable power of attorney, planning for your funeral expenses, talking to family members about what you expect to happen after you pass away, and even pre-planning or prepaying for your funeral. These aren't things that we like to think about, but having these things in place can help your loved ones when you aren't here. The end is in sight. Enjoy your accomplishments. If you have any questions about retirement, please reach out to Metro Human Resources at 615-862-6700 or visit our webpage at nashville.gov/HR. You can also email at hrbenefitservices@nashville.gov. If you have any questions about your pension or need help with an estimate, please reach out to us.